You are watching the most expensive game in history, but the scoreboard has been flipped upside down. While the world waits for OpenAI's IPO like it is a religious event, the company has quietly chosen to stay private, rejecting the immediate cash infusion that every other tech giant begs for. This is not a delay. It is a blockade against the very mechanism that kills innovation. The traditional path for AI dominance is simple. Go public, raise billions, and buy every chip available. But here is the brutal truth about why that path is a trap for OpenAI. By staying private, they are avoiding the quarterly earnings call that forces companies to prioritize short-term profits over long-term survival. This is the first secret of the new AI economy. Here is the payoff you need to understand. Wall Street does not fund research, it funds growth. If OpenAI went public today, its stock price would be tied to immediate revenue, not the abstract promise of AGI. Investors would demand margins, and margins require cutting R&D. Staying private allows OpenAI to burn billions on compute without answering to shareholders who do not understand the physics of training large models. But there is a deeper cost to this strategy. By remaining private, OpenAI has handed total control to its biggest backer, Microsoft. This creates a dependency that public companies rarely face. Microsoft is not just an investor, it is the infrastructure provider. This means OpenAI's fate is now inextricably linked to Microsoft's cloud strategy, not just its own product roadmap. This alliance gives OpenAI something money cannot buy: guaranteed access to the world's most scarce resource. While competitors scramble for H100 GPUs, OpenAI has a dedicated supply chain. But this exclusivity comes with a price. Microsoft gets first look at OpenAI's breakthroughs, potentially turning them into a cloud service before they ever reach the consumer. Who really owns the intelligence, the creator or the host? The risk is not just about control, it is about valuation. Private markets are opaque, and without a public price tag, OpenAI's value is a mystery. This lack of transparency creates a vulnerability. If the technology stalls, or if a rival like Google or Anthropic releases a superior model, there is no public market to correct the valuation. The company could be overvalued by billions, hiding a crisis that only insiders see. Yet this opacity is also a shield. In the public market, a single bad quarter can wipe out trillions in value. In the private market, OpenAI can afford to fail. It can pivot. It can experiment with dangerous or unproven architectures without fear of a stock crash. This freedom is the only thing that allows for true, radical innovation in a field that moves at the speed of light. The real battle is not between OpenAI and Google. It is between private ambition and public accountability. Public companies must answer to millions of small investors. Private companies answer to a few large partners. This shifts the center of power from the marketplace to the boardroom. The future of AI will not be decided by what the public wants, but by what the private backers deem necessary. This dynamic changes the definition of a monopoly. A public monopoly is regulated by antitrust laws and public scrutiny. A private monopoly is hidden, untested, and potentially more powerful. If OpenAI becomes the de facto operating system for the internet, it will do so without the checks and balances that come with being a publicly traded entity. The power is concentrated, not dispersed. So, is the delay a win? It is a win for control, but a loss for transparency. OpenAI has bought itself time, but it has also sold its independence. The company is no longer a standalone star. It is a satellite orbiting Microsoft. This is the new reality of AI. The labs are becoming divisions of the cloud giants, and the race is no longer about who builds the best model, but who owns the infrastructure. The IPO was never the goal, dominance was. By staying private, OpenAI has chosen a harder, longer road that allows it to ignore the noise of the market and focus solely on the physics of intelligence. But in doing so, it has handed the keys of the future to a company that already controls the cloud. The question is not if OpenAI will succeed, but who will own the profits when it does.